There we go.
There we go. Welcome to the weekly roundup, special Easter edition, because tomorrow's Good Friday and the market's closed and we are not here. We'll
That's right.
be scouring the west side of Ottawa looking for Easter eggs and the Easter Bunny.
Definitely.
Yeah,
Excited. I do like chocolate, so I'm excited about that.
all weekend we're just going to be on insolent highs and lows all weekend, just trying to temper our chocolate intake. All right. Well, notoriously, this week is pretty slow in the market. Anything material happen this week?
Well, yeah, I'd say plenty going on in the markets in the world, and I mean, you called it earlier this week where Reddit had a bit of a rip, and
Yeah.
that's sold off again. It got up into the 70s. I think we're back down to where we were this time or so last week when it IPO'd. That's been
Mm.
volatile, but I think that's going to be fun to watch and see how it trades.
Mhm.
Uh, Donald Trump's company too is trading quite volatile as well.
Mhm. Mhm.
Um, crypto news. So Larry Fink's BlackRock launched they called it a tokenized money market fund. So they launched like essentially like a T-bill type fund, but it's on a token.
Mhm.
So, and he's had a couple of interviews lately where he's talked about, the tokenization of everything, real estate, stocks, bonds, everything settles instantaneous. I know we've been talking about this for a while, but now that Fink is on it and BlackRock is on it, it's getting a lot of attention. I think it's very cool.
If you look into the technology, it just makes sense of that's going to be the next wave, right? As far as things settling, like you said, and
Mhm.
um, as far as real estate and smart contracts and whatnot, right? That's what we're talking about. So it's makes a lot of sense. And it makes sense that BlackRock and some of these big funds are on board now too.
Yep. And so they've been eating all the Bitcoin too. So BlackRock and Fidelity are getting all the fund flows. So all the money going in is going into those two. The other ones are getting a little bit. Ark's version is I think number three, but those two are primarily getting all the fund flows. So that's interesting. Famous economist died this week. The guy that wrote Thinking Fast and Slow. I
Mm,
don't know if you've read that or not. Daniel Kahneman.
no.
Yeah, pretty famous behavioral economist who's credited with a lot of unique thinking. Good book. So he died this week. So lots of people putting out information about him. But from a market perspective, nothing really changed too much from what's going on with interest rates and so on and so forth. GDP was slightly better than expected in the US, but nothing that really changed the trajectory of anything else at this point.
Gotcha. Gotcha.
Mhm.
Okay, so that being said, were you able to track down a couple slides at least, or
Well, I got 47 today. Just kidding. Just
I'll
got a
leave you to it.
few. Got a three. Just did three today. Kept it
Oh,
simple. Stayed within my landscape.
league minimum. It's the league minimum right there.
That's it. That's it. I thought
Wow.
this was an interesting way to look at US GDP. So this gives you kind of a take at how fast the US economy is going on a state by state basis. And I've never seen this chart before, but I thought it was a cool way to lay it out. And as you look at it, we're starting to be 34% of US states have growth below 1% right now. And if you look at that dotted line that's happening across here, that's since 1980, I guess they've been tracking this. Anytime we crested through this number where we're at today, plus or minus, we've been in a recession. So interesting, gives you a better cross section of the whole United States, not just a single number, which we saw today, as I mentioned, a little bit better than expected. But growing number of states showing growth below 1%, it's not a good thing. Old David Rosenberg's always got some great charts. Interesting, something to think about. Some people talk about housing inflation. This is U.S. data. So when we look at it, it says new single-family homes median sales price. And as you know, we had this big rip as rates fell up into this peak here. And since then, we're 18, probably 20 months into a rate hiking cycle. And so the home price deflation, as you look here, is continuing to fall. So that's going to be a downward pressure on inflation and a positive for the view that we don't think inflation is going to run away anytime quickly. So prices are falling. Obviously, these gray bars, this is a shorter-ish chart. Gray bars are recessions, but thought this is a good chart to have a peek. Excuse me. Springtime. It's pollen time. So the XPAM, so for anyone who doesn't know what XPAM is, it's a hedge fund run by Raoul Pal, top performing hedge fund in the world. Anyways, this is a great chart to look at Bitcoin, ETH, and now Solana versus all the other major asset classes since 2011. We've looked at this chart before, you and I. Maybe many people haven't looked at it this way, but certainly if you look at the return profile of Bitcoin since then, it's up 20 million%. And if you look at any other major asset classes over that period of time, let's just hypothetically look at, investment grade bonds, for example, it's up about 45% from that period of time. Long-term treasuries up 30% through that period of time. So just to show you the scale, and everyone talks about volatility, but if volatility is to the upside, ultimately that results in some serious performance. So certainly an interesting chart that doesn't get a lot of attention. I thought it'd be worth taking a look at just to give everyone a scale of understanding for what kind of upward volatility looks like as well. That's it for the charts today.
Okay. Lovely. When you said it's up 20 million%, sound like you're just making that number up. Like that's how high the number is, right?
That's how high the number is.
Yeah. Oh, this is up 20 million%. 100 million billion.
Yeah, exactly. I don't think I'd ever thought I would say that in my lifetime.
Exactly. Okay, well, obviously it's a long weekend. Markets are closed tomorrow, but they reopen on Monday, so we should have a regular week next week, or does it tend to be slow coming out of Easter?
Oh yeah, Monday will be quiet and slow as well. But then we should be Tuesday, everyone back in the office to be a bit more active, a lot more things going on. But I still think we're looking towards, April meetings. We got central banks talking about what's going on there. Right now, probabilities are 70-ish% from both the Bank of Canada and FOMC that they're going to cut rates in June. That number, I think, likely continues to creep up as we see more data start to come through. Put up in the daily today, I believe, just the employment numbers in Canada. And so the employment numbers look pretty good, but all of the employment numbers were federal government jobs. So, I don't know that that's sustainable and also not necessarily a good sign of the health of the economy. You want to see that spread across multiple sectors, including small business. So I don't think that number continues to grow at this point. So certainly the quality of the jobs is different, worth paying attention to. But yeah, should be a quiet week Monday, or quiet day Monday, but then back at it for the rest of the week from there.
Amazing. Okay, well, that's it for us. I know tax season is kind of coming to an end here, or at a peak. So we're still sending out tax packages every week. So if you need anything for that in that regard, please let Eva or myself or even Ben know, and we'll get those over. With Eva on board now, we're pretty quick at getting them. We usually can get them the same day or the next day for you. So give us a call, shoot us an email, send some smoke signals, whatever you want to do. We'll get them over to you. Okay, perfect. On that note, happy Easter to everybody, and have a great long weekend, and we will see you next week.
Thanks, everybody. Take care.